So thank you all for joining us. I'm George Morris, Director of Sales and Marketing for the Jacobsen. And on Zoom with me, I have Ryan Standard, who's our Senior Analyst for Fats and Oils. And Ryan's going to take us through this animal fats outlook and the demand coming up here on the horizon. With that, Ryan, do you want to take it from here?
Well, thanks, George. Apologies in advance. These strange times have me working from the home studio. So if you hear toddlers screaming in the background, it's just a normal day at the office for me. But enough of that. We'll skip on to the fun stuff. Today, going to talk about the animal fats market and the big demand that's coming on the horizon. That seems to be the hot topic out there amongst everybody is the growth in renewable diesel. We've had some announcements recently of some big plans coming down the line here in the next few years, and people are wondering where all the feedstock is going to come from. So I'm going to delve into that a little bit, really just kind of focus on the next year to get a supply outlook, but also touch on the longer term forecast as well. I do want to tell everybody up front that all of this information is updated and available on a weekly basis on our forecasting tool on the website. So we update our forecast going out a year for all the low CI commodities, distillers corn oil, tallow, choice white grease, etc., as well as soybean oil and pollen with commentary. So you can get a weekly update there on some of the stuff and a little bit more detail. Again, with that, I'll just go ahead and jump in. So renewable diesel here you can see is set for a really big increase over the next year. This is a look at annual capacity on a given point in time. So here on the far left x-axis you can see January 1st, 2019, that's the annual capacity, a little bit over 400 million gallons per year. That rapidly escalates to almost 1.5 billion gallons per year in 2021. That's December of 2021. So we're expecting feedstock needs to grow from about 5 billion pounds per year in 2020 to about 10 billion pounds per year in 2021. The current domestic animal fats UCO DCO market size, so we'll call that low CI for brevity's sake, is 16.3 billion pounds. So if all of this comes to fruition in 2021, theoretically, all these plants run off a low CI, that's 2/3 of the entire low CI market would go to renewable diesel production alone. That doesn't include biodiesel, that's just renewable diesel on its own. Can we go to the next one, George? We're already seeing effect on the price, and again, I referenced 2/3 of the low CI. We know not all of these plants are going to run off of tallow and choice white yellow grease. Only a few have the production capability currently to even use higher acid animal fats. So we see a lot of technical tallow used, technical tallow blended with BFT to get a lower metal spec that's preferred in these renewable diesel facilities, and soybean oil. We've seen a lot of soybean oil demand come on in the fourth quarter. Additionally, there's been demand through the third quarter as well. This had a big impact on price. That has raised the price of these, for example, tech tallow here. You can see that green line is 2020, the yellow line is 2019, and the blue line is 2018. You see how that relative price, especially the front half of the year, has moved higher year on year relative to soybean oil. And that's because that low CI, the low carbon intensity value of technical tallow is much better than soybean oil, and there's more demand for it coming from these renewable diesel players. So there's a higher premium being put on these feedstocks at the present. We're seeing cash soybean oil today driving the market. We've seen higher distillers corn oil prices. Tech tallow has come off a little bit, but some of that may be tied to some shipping issues into the Gulf for export, and so sellers kind of moving stuff back into the interior. But we expect that market to rebound and trade higher before the end of the year. Can we go on to the next one, George? All right. Now we're just going to focus on supply here. And what do these markets look like moving into 2021? Where's all this material going to come from? You know, I did say that not all of it's 2/3 of the renewable diesel production that's coming online could absorb all the low CI. And I did say that, of course, not all of it's going to be low CI demand, but there is an increase in low CI demand coming. So where is all this production? Where's all this feedstock going to come from? Is it coming? Is it going to come from tallow next year? No. Tallow is up maybe 1%. It's actually 0.5% increase in 2021 relative relative to 2020. So that increase, or that slight increase in supply, is expected to have pull the tallow prices higher in the next year. Can we skip to the next one, George? Choice white grease production is forecast higher, 4.3% higher relative to 2020. But choice white grease is one of the smaller markets. It's a little bit over 1 billion pounds a year. So that increase isn't going to, match the increased demand coming from the growth in the renewable diesel sector. A big driver of the increase in choice white is the demand for pork in the U.S. as well as the demand for pork in China. All the focus on COVID-19 this year and the end of last year, I think people have kind of forgotten that the avian influenza that's affected China and parts of Europe continues to cause issues. So there's big losses there and big protein demand. Australia has kind of run out of gas in their protein supplies. Their beef kills are off big time. And so China is going to have to lean on the US a little bit more for protein. And that's going to drive that pork demand and higher choice white grease output. DCO production is forecast higher. That's up 16%, and that's a significantly sized market. So that's going to contribute to more feedstock next year. That's going to help offset some of that additional demand. We're assuming a more normalized production schedule in 2021 relative to last year. As you can see, that green line is 2020 production. We had that big dip in April and May as gasoline demand fell off and ethanol production slowed rapidly. The addition of E15 helps production as well, or output, and that's expected to help distillers corn oil production. So there will be some more of that, and that's going to offset some of the upward price pressure that we expect to see on these feedstocks next year. And yellow grease and UCO supply, we're expecting that to move higher as well. Some of the increased poultry production, increased choice white, there's going to be some off-spec fats out there that are going to get blended with an increased output in used cooking oil. Again, this is assuming a more normalized production schedule for restaurants, a more normalized output for used cooking oil relative to last year. So kind of a traditional growth pattern we've seen. So here, overall, you can see there is a big jump in supply from 2021 to from 2020 to 2021. A pretty good increase from 2019 as well. Obviously, COVID's affected output across all fronts, and we expect to see a 7% increase in 2021, just under 1 billion pounds. And what's that going to do to price? Like I said earlier, if you want to see all of these price forecasts, check out our forecasting tool. They're all there for all the commodities, or I shouldn't say all of them, but yellow grease, distillers corn oil, all the low CI ones, as well as soybean oil, and I believe there's a palm outlook in there that Tori puts together as well. But just focusing on the BFT, the limited increase in output combined with a bigger increase in demand from not just renewable diesel, but growth in other sectors as well, is expected to drive the Packer BFT price to a peak of about 37 cents in July. Palm oil, that is forecast lower for the second half of 2021, and that'll put some pressure on the market. Offers the possibility for some substitution. But yeah, strong soybean oil market, strong demand are expected to drive that price consistently higher through the beginning of the year, peaking there in July. And and I've kind of gone through this quickly, and I'm going to spend some time on this slide, but that red arrow shows the 2021 renewable diesel demand. So that's kind of what I've referenced next year. Everything to the right of that red arrow is what's coming through 2025. So, 7x or 7.5x growth from January 2020 in annual capacity to December of 2025. The feedstock needs are expected to grow from about 6 billion pounds to over 40 billion pounds in 2025 per year. And to put that into perspective, the current domestic animal fats, used cooking oil, and distillers corn oil market is about 16.3 billion pounds. If we couple in the world demand, the world supply of all of these products, it's along with soybean oil, it's 63 billion pounds. So there's that leaves an extra 23 billion pounds for everything else in the market. You know, that's not taking into account canola and some other feedstock options that these plants are going to have to lean on. But that's just to put things into perspective. If you look at the world supply, excuse me, I believe it's just over 36 billion pounds of low CI feedstocks. That's everywhere, every continent. That's used cooking oil, tallow, different greases, as well as distiller's corn oil. So if you took all of the low CI feedstock across the globe and tried to satisfy just the US renewable diesel demand, if it hits capacity as planned in 2025, there wouldn't be enough feedstock. I'm sorry, 34 billion pounds of global low CI supply. So a few things are going to have to happen. It's unlikely that all these plants are going to come to fruition. I think there's going to be scarcity issues, and people aren't going to be able to get financing because there's not going to be a sure path for feedstock. Additionally, you're going to see credit values come off when you have an increase in renewable diesel output into that California market. You know, more supply equals less demand, and that's going to reflect on the credit prices. So we may not see the wide spreads that we're going to see peak in maybe 2021, 2022 that get filtered down into the feedstock market necessarily carry over into those markets. And that might slow some of that growth going into, 23, 24, 25. With that said, and the main point I have here is that there is a lot of demand coming, and it has this demand on the renewable diesel side, as well as the biodiesel side to some extent, has the power of LCFS credits, of blender's tax credit, of decarbonization incentives behind it. And that's going to put a higher price on feedstocks. It's going to be tough for some of these traditional industries to compete. We may see an influx of palm come in where it hasn't before. The oleochemical industry may have to rely on palm usage more in the coming years as tallow prices continue to climb and the spread widens between palm and BFT and technical tallow. It'll be tough to compete in the consumer sector market if there's cheaper products out there relative to tallow-derived products, the stearic acid and the oleic acid that come from tallow. Something else to keep in mind, and people have asked this before, and I'm not trying to be facetious here, is there's not, meat packers aren't going to raise cattle for tallow. If you get, just to use a rough figure, and it's more than this, but 100 pounds of, if you get 100 pounds of tallow off of a steer, and that tallow is 31 cents a pound, you're going to have a value of, $31 for that head of animal. Just the chuck, the front part of the animal alone is going to be well over that. It's going to be in the hundreds of dollars. And so meat is obviously the main driver of slaughter. And so no one's going to start creating more animals and flood the meat market with more supply just to go after a $31 per head or $37 per head, for that matter, credit on an animal. So we're going to have to see some imports come into the U.S., I think, in the coming years. It's likely that you see some used cooking oil shift from the European Union out of China into the west coast of the U.S. as we see more plants come up there. There's limited import capability coming from South America and the other countries due to some trade restrictions, but also already robust domestic demand in South America. Currently, Brazil is importing tallow from the U.S. for biodiesel production. There's restrictions on European Union material. Australia and New Zealand are going to be tight as they go through a herd rebuilding process, but a big chunk of that is already going to Singapore. So things are going to be very competitive in the next year, but the next 4 to 5 years. And we expect that to drive prices higher. And with that, I've kind of rambled on this last slide. I'm happy to take any questions that anybody has, George.
And again, if anyone has questions, drop them in the Q&A section in Zoom. We have a couple here for you, Ryan. This one's referencing slide 1, so I'm going to shoot back to that. Is this domestic capacity that we're looking at here?
Yeah, that's purely domestic capacity.
Okay. Another question we have here is how much low CI supply goes into renewable today?
So the low CI into renewable, I would say this is just off the top of my head. Today, percent, maybe 85%. There is growth coming. We expect about 200 million gallons of capacity to come online at the end of this year or the beginning of next year, and that's going to be largely driven by RBD soybean oil, in addition to, excuse me, some distillers corn oil.
Okay. How much animal fat goes into the U.S. feed market? Will the U.S. feed market switch to low CI palm oil, freeing up that portion of animal fat for low CI HVO production?
So I'd say right now it just depends on the industry. So if you look at tallow, for example, because that's the largest supply, I'd say about a 25%, maybe 30% of tallow goes into the feed sector. And there is talk of palm being tested in feed, and it's a complicated, you know, it's complicated to do a good forecast on this because, where is grass-fed beef demand going to, what's that going to look like in 5 years? My guess is it's not going to completely take over the livestock feeding industry. In fact, I'd say it's probably impossible that happens. But cattle don't have to eat fat, so it can be purely grass or other supplementation into that diet that doesn't require tallow. So it's possible to replace all of that out, but I don't think that's going to happen just on a consumer preference basis. And again, meat packers are in the business of raising, or buying steers or buying cattle for meat, and they want that end product to be a premium product, and tallow helps them achieve those goals. Again, if a widespread the palm develops and we see palm work in dietary supplementations, the nutritionists approve on it, it gets tested through, then we could see some of that start to come into the country and feed animals, and more tallow shift into the renewable sector. But that's going to be a sticking point for sure. Price, but also consumer preference, because there's that value in the feed rations, but there's also that value of end use to the consumers and to the meat packers.
Okay. And I have one more question, unless some more questions float in. Oh, I got another one floating in too. Does your low CI forecast assume the current HVO producers using soybean oil will move to low CI versus bean oil, or are you counting soybean oil as low CI?
The low CI forecast. So that's I don't think we're forecasting usage. It's more just potential demand. So I think looking ahead, there's no way that all these plants can use low CI feedstocks. There's going to be a number of them that are going to have to rely on virgin veg oils. And it's not just from a supply standpoint, but I think a pre-treatment standpoint. A lot of plants are going up with the capability of only taking low acid, low metal feedstocks, and so they're having to use RBD soybean oil or a blend of tech tallow and BFT, and that tech tallow and BFT gets taken away pretty quickly. At the total market supply of tech and edible is just about 2 billion pounds, so that disappears really quickly. The total inedible tallow market and edible tallow market's just over 6 billion pounds, and so that doesn't last very long. So there's going to have to be some usage of RBD soybean oil heavily moving forward.
Okay. This next question is probably better for Bob Lane, but I'll throw it at you, Ryan. What's your thoughts on the expansion of LCFS into other states and countries?
Bob's done a lot of work on that, and that's a good question for him. It seems like there's some plans, obviously, to get that in place. I guess, just off of my own personal bias, I think it depends on what the confidence is in the RFS. So I think if people see the RFS starting to slip away, then there'll be the move by states to try to come up with their own renewable fuel programs to keep biodiesel and to keep renewable diesel in play, and to institute decarbonization programs. But obviously, with everything going on this year, it's I think the focus of legislature has been elsewhere. But I know that's been heavily talked about in the past.
Okay. So along those lines, you commented this supply will impact LCFS credit prices. How long do you expect that to go?
Uh, that's probably more in Tory's bailiwick on the LCFS credit prices. It's just a natural observation, I think, on supply and demand. And the more renewable diesel that comes into the market, the more pressure I think there's going to be on that LCFS credit price to go down, just purely basis on the amount of credits being generated and also the demand, because a lot of these refiners are offsetting their credit deficits by becoming credit generators, and so that will also have an impact on that price. You'll have less demand in the market as well.
Okay, thanks, Ryan. Do you see choice white grease ever trading at a premium to bleachable fancy tallow?
No, I don't. I think that BFT is considered a premium in a number of markets because of its steric-oleic acid split, and it's been preferred by the renewable diesel groups. So I just think it has a better like chemical profile for the higher paying markets, and so I think it's always going to maintain, or at least in the near term, I don't want to say always, but it's probably going to maintain that premium moving forward.
Okay. Can we expect a decline in biodiesel production as renewable diesel production expands?
I think it's going to become increasingly harder for renewable diesel, or I'm sorry, for biodiesel producers to compete in these markets, especially with feedstock prices expected to go higher. If they don't have access to the California market, I think biodiesel, and Bob can call me on this if I'm wrong, but I believe biodiesel has a slightly better credit generating potential than renewable diesel. I think it has just the energy input, I think, is a little bit lower, so it generates more credits. So in theory, you can make more money off of biodiesel on a credit basis. It just doesn't have that drop-in fuel capability like renewable diesel does. So it's tough for it'll be tough for the biodiesel producers to compete into that market and generate the credits the way that the renewable diesel producers do. And then in turn, they're not going to have that revenue that allows them to be as competitive for feedstock. So it's going to be tough for especially some of the smaller players out there.
Okay. What's the rough market shares for the top renewable diesel feedstocks?
The rough market share. So going through, it just depends on plants. So if you look at some of the bigger plants out there, it's mostly, I'd say the majority of players use a blend of technical and bleachable fancy tallow. So like a max 2 acid product that gets further processed to have lower metals. So that's, I would say, the majority of it. But then you have a major plant that has robust pretreatment capabilities and can take as high as a 20 FFA feedstock. So they don't use very much technical tallow or bleachable fancy tallow at all. It's all it's a mix of, say, maybe at this facility, it's a mix of used cooking oil, distiller's corn oil, and then like yellow grease, choice white grease, brown grease, all that makes this 20 acid animal fat that qualifies for a tallow CI under the low carbon fuel standard. So, at that plant, maybe a third, and then other ones, if they can, a half or 2/3 tallow, a third or a half used cooking oil, depending on how much they can get into their plant, depending on what their pretreatment capabilities are.
All right. Is there a place for biodiesel outside of California?
Yeah, I think there's a place for biodiesel within California. And in the local markets as well. I think you'll see, particularly in ag states where biodiesel has a strong foothold, there's biodiesel incentives, blending incentives, and I think that you might continue to see biodiesel supported, particularly in the Midwestern ag states, by some programs that incentivize diesel blending with B100.
Okay. Will we see ethanol plants replacing old extraction equipment with a newer, improved extraction equipment that extracts a higher percent of oil from each bushel?
That's obviously there's an incentive to extract as much oil as you can out of the Out of the DDGs at ethanol plants, while still maintaining some fat integrity as a feed ingredient. So that's a balance that I think each ethanol plant's going to have to take a look at and see, where that falls on the spectrum. So how much can they take out of the DDGs and still move those DDGs into the feed sector, but also have the technology to take out what they can. So, our assumptions for DCO production moving forward assume a modest increase. I think we're at like 0.8 or 0.85 pounds per bushel now, and that could go up to like as much as a pound per bushel, over the next 5 years. But the exact like equipment and which plants, I can't really speak to that.
Okay. Is brown grease viable at scale for proposed renewable diesel plants?
No, I don't think so. It's a supplementation to a feedstock plan or a blend with other things to like that. For example, and I should comment, like brown grease is, it's such a varied product. Like yellow grease that's had some heat-related FFA issues and sells at a 20 FFA is considered brown grease, but so is trap grease or sewer grease. So there's a number of different like high-acid greases that are considered brown grease. So it's kind of a bit semantical, but as far as just brown grease alone, I just don't think there's enough supply out there for to sustain a renewable diesel plant off of that. Is it possible to, using a blend of different, choice white grease with yellow grease with 50 acid brown grease? It's possible, but not on a widespread basis, I don't believe.
Okay. And what is the likelihood of 50 cents per gallon blender tax credit through 2025 or a national LCFS?
Honestly, I can't.
That's
I
a
can't
Bob
speak
Lane
to that.
question, huh?
Well, I think that's a crystal ball or some kind of magic question. If you can tell me who's going to be in Congress in 2021 and who the president will be, I'd be amazed. It's, I have no idea with that. But I know there's certainly a push from certain groups to get it done.
All right. Ryan, if people want to learn more, I will give one more question and then I got to cut off questions. How much low CI will be available in 2021 and how much will the renewable diesel industry need?
So let me go back to the presentation. So the availability question, we get asked this a lot, and I always say it just depends on the price. So in theory, it's all available. It just depends on what price the renewable diesel sector wants to pay. So if they want to pay $1 per pound, then they'll have access, I suppose, to all X number of billion pounds that are out there. But if they're only able to pay 16.3 billion pounds, if they wanted to pay $1 per pound, it'll all be out there. But I don't.
To clarify, that response was total produced versus 2020.
So so if we have a 7% increase, again, it's all kind of available to the industry. It just depends on price. But I think that to flip it a little bit, I think there's going to be less available to the traditional demand sectors because of the growth in the renewable diesel sector. I can look at the balance sheets and get a more informed or accurate answer in terms of positions, but I think there's a little bit more going to be demanded by the renewable diesel sector, so there's going to be less available to traditional demand sectors like oleochemical, feed, and probably export.
Okay. Well, thank you, Ryan. If anybody wants to learn more about what we're doing on our end to track what's happening here with renewable fuels, you can go to our website, scroll all the way to the bottom. You'll see a banner that says Renewable Fuels Watch. Click on that, and it has all of our reports, our project tracker on there. Everything you need to know is all there. And Ryan, if anyone wants to get a hold of you, maybe best to email you.
Yeah, email me, ryan@thejacobsen.com. I'm on ICE too at rstandard, or in my phone number is on the site, but it's also 331-276-8227. Happy to chat markets at any time, and maybe I can answer some of these questions a little more in depth and do some research for anybody who might need some assistance.
All right. Well, thank you for the attendees for your questions and your attention. And Ryan, thank you for the time. We'll take this whole thing and post it up on the site so you can download the deck and watch the video again or share it out. Thanks again, everyone. Thank you, Ryan.